Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts. I'm going to start with Google Trends, which is a resounding scream that nobody is here. If you think about Google Trends in March at a similar price versus now, we are significantly lower. This looks at basically search interest, news, online mentions of the word Bitcoin over the past 5 years. We are almost at a multi-year low. We're not quite as low as we were going into Q4 2020. The table is set, as you will see, through a variety of metrics. Not a lot of people here, not a lot of excitement, certainly not a lot of euphoria. This is the year to date, I guess, past 12 months. And we're right at the low end there. So there really isn't anybody here based on this metric. It's similar for ETH, it's similar for Sol. I'm not going to go into it, but all of the euphoria, the excitement that we saw post ETF launch has certainly come way down. And that's what we want to see if we expect a large move in Q4, which I do. That is the expectation. The expectation is maybe a 2x by the end of the year. Looking at cycle low comparisons, you would hardly be able to tell that this cycle was different than the previous two based on where we are sitting. This was COVID here. This was the Bitfinex hack here. Nevertheless, we all come together in the end here at day 675, and we should start to get going within the next 30 days, eventually finding a 3 to 25x, which is what this range is, somewhere in here. By the time the cycle is all said and done, likely throughout 2025. Now, I doubt we are as bullish into 2026, but that's something to discuss when we get there. First, let's make it through Q4 2024, but we're arriving right on time based on the previous cycles. Looking at the cost basis of the ETFs and MVRV, which basically tells you how much unrealized profit is in whatever you're looking at, in this case, the ETFs specifically. This may be more important than on-chain MVRV just because the ETFs and the volume of the ETFs may start to take over. There's still obviously a decade of coins that will be moved once price goes higher, as we have already seen. There will be plenty of supply that gets unlocked. If we go to 100, 150, 200, 250, whatever it is, people will start selling. And it's just a matter of, do we have enough buyers stepping in to keep price flat or not? At bare minimum, right? Never mind rolling over, never mind going higher, but what does the supply demand picture look like? So you can use something like MVRV to give you an idea of potential upcoming selling pressure based on unrealized profits, is like what I think of it as. So currently where we sit, we are above the average ETF cost basis. This will continue to move up as price moves up, if we get volume as price moves up, but it's not the same for all of the ETFs. In any event, this looks good. It's hard to use a couple months of data and say, okay, this is the high, look out for 1.4 on ETF MVRV. We're probably going to need years of data, but once this starts to get several multiples above the cost basis, that's when we have to think about, okay, especially going into a rebalancing period, either end of quarter or end of year, you're going to have people rebalancing if they're up 2x, 3x, 4x, just based on risk limits, based on portfolio allocation limits. That's something to think about down the road. Looking at on-chain MVRV from Bitcoin Magazine Pro, we're sitting at a 1.88 on the Z-score, very similar to where we started in Q4 2020, also in 2016, before the run-up there. So this looks like everything else. Nobody should be surprised when we go higher. You should not log on anywhere and think, oh man, was there news? No, there isn't news. The news is we've been doing nothing for months, and there should be an expectation we're moving higher. Rates are coming down, liquidity is going up. Is that a promise that we go higher? Absolutely not. But we have seasonal tailwinds. We have liquidity tailwinds. So the table is set for Q4. Looking at realized cap hodl waves, this is one way to take MVRV maybe a step further and look at the age of the coins that are moving and look at the number of coins on the network that have moved, in this case, within the past 6 months. So near the tops, we usually see a massive spike, right? We see a ton of coins moving on chain. We're not seeing that here. We saw a lot of that probably thanks to GBTC. I think that's on here. ETF stuff obviously is going to affect this, but this is something to watch into 2025. No real issues there whatsoever. Back to the ETFs, we saw large inflows last week exceeding 1 billion. We saw successive days of continuous flows here, and this is what we want to see. We don't need 1 billion every day. Some of this is probably the carry trade or basis trade. Fine. Okay. All we want is 200 million a day. Is that so much to ask? Is that really so much to ask? You just want consistency. That's all we really want. That's all we can really ask for. We do not want spikes. We do not want crazy volatility here. Just slow and steady. That's all we really need to get things going. For ETH is at the opposite, where it hasn't really had anything leading up to last week. Now, last week, things started to look a little bit better, but on the whole, not a lot going on yet for ETH. And that's fairly obvious based on where the price sits. Now, that's going to change later on, probably in Q1. We're going to see at some point, I'd imagine, flows exceeding BTC flows. Think about that. How's that going to affect ETH BTC? How's that going to affect price of ETH versus BTC? I think at some point that'll happen. I don't think it's going to happen anytime soon, but at some point, sure, that could happen. We still have cumulative negative flows for ETH since the ETFs launched. Looking at the annualized basis for the basis trade potential, it's around 10%. So somebody could come in here and, let's say, based on how this looks, this could be somebody legging into a trade on the basis side, specifically using the ARC products to the tune of 300 million or something, right? Like that's possible. And they probably have enough basis to do that. But we're still up like 20% in September. So on the one hand, it's like, okay, we had 1 billion in last week. Why isn't price higher? On the other hand, this is the best September we've ever had, dating back since 2013. Looking at the quarterly returns for BTC, this is why we're here, folks. This is why we're here, Q4. Do not be surprised if things don't go well. A surprise would be a red Q4. That would be the surprise. A mega positive Q4 is the expectation based on seasonality. ETH, not the case here. ETH does better first half of the year, and that would make sense based on some rotation or catch up for ETH into 2025. Looking at Bitcoin for September, like I said, 10%, 20%, I don't know what it is, 8%. Over the past couple of weeks, over the past month, whatever, it is best September we've had since 2013. As many people have already pointed out, anytime we've had a green September, the next 3 months have all been positive. I'll believe that when we see it, but I do like the odds of a very, very green Q4. Before I talk about some individual charts here, let's talk about Kraken Pro, today's video sponsor. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. There are a ton of alts that are doing well on the USD side. There are fewer alts that are doing well on the BTC pair side. There are probably more alts that are doing better against ETH, better against Sol. Both of those are kind of stuck in the mud, not really doing much of anything. Although Sol admittedly looks better than ETH. We'll get to both of those in a second. But for any chart, I'm always looking for pre-breakout conditions. This is what a bottom looks like. You're going to hear me say that a lot. If we go to ETH BTC, that is not what a bottom looks like. It does not look like this. It does not look like some random push lower trying to recapture highs. So as much as I want this to go lower, it doesn't have to, but it certainly doesn't look like it wants to just rebound magically higher. We're just not there yet. But there's a ton of evidence for bottoming potential on many, many alts. Looking at BTC, if you were to take an alien from Planet Zargon, the best technical analyst on Planet Zargon, and you give him this chart, or her, or they, or them, or whatever they might be, they would probably tell you, well, it looks like you had a 80% drawdown, and then you had 4 consolidation periods. That kind of sums up the past 2 years, 3 years. Now, sitting through this was obviously more than that, but realistically, this is what we've had, and this is the fourth consolidation that's been much messier than the first three. But if you're bullish, it feels better to be at the top of this range again than the bottom, as we might fall out the bottom if we were to revisit that zone again, which is what many bears, I'm sure, want to see. They want to see us drop below, in this case, around 52, which is the early pivot. So we've got a plethora of options here for targets based on this consolidation, whether you want to take it in pieces or not. An end of year, end of quarter target of 6 figures, 100K, is possible. I don't know about a 2x from here, but a 6-figure attempt is certainly possible. The first target is just a simple, can we make a higher high? Can we hold a higher high? Can we reach our double bottom potential here, which would basically be an all-time high retest? Now, this may make a new low. This may get denied at the all-time highs. All that is totally fine. As long as we stay within the range, stay within the top of the range, maintain a series of higher lows, I don't really care what this looks like. This could look extremely sloppy into October, throughout October, into the election. Very sloppy election day, week, whatever. But the measured move on this is here. The measured move on the triple bottom is here. The measured move on the entire range is up here. Typically, post-halving year, we do reach for the R5 yearly pivot. We actually exceed the R5 yearly pivot in post-halving years if you go back and look, which is currently at 116,000. 116,000. So you could set up a theoretical, hypothetical trade where you say, okay, my stop loss is lower lows, my targets are here. Next question. Like, you don't need to take it that much farther. If you're on high leverage, the conversation is a little different, but if you're using low leverage or no leverage, what do you care? Again, you can sit in this chop, you can afford to sit in this chop, but if you're trading options or leverage, it's a little bit of a different story. Additionally, there's this fourth target, the cycle peak target, which does align with the power law model. This is from the Real Plan C. I'll put his Twitter in the description of the video, but like many charts, there are a ton of high time frame cup and handle charts in all markets, TradFi, metals, crypto. For Bitcoin, the measurement is basically 200 to 325, something like that. That's not going to happen in a day. That'll probably take multiple quarters to get there throughout 2025, but that is the measured move of this pattern. So nobody should be surprised when, if we break out, we start making highs. We start going to all-time highs. No one should be surprised. These are the fib measurements of the previous ranges. They've all been hit, in many cases exceeded. So that's what we're dealing with here on Bitcoin. On the cloud, we've got a weird TK situation with the TK widening below the cloud, below price. It looks weird. I'll just say it like that. What you want to see is TK cross above the cloud, ideally, both the Tenkin and the Kijun rising. So there's a lot of weirdness, again, that could happen. And murkiness in price sort of swirling between, let's say, 63 and 66 for an extended period of time will help pull this up, but that's going to take some time. Cloud also still bearish, but we've held above the cloud quite nicely. I just don't know how much in the immediate term we can expect without some squirreling around first at these levels. If I was on high leverage, I would place a stop loss at 62.5. That is the Williams fractal level, even though I don't have that on the chart. The 1050 cross has been bullish for a while now. You can see in this range, the 1050 cross has been all over the place, but this doesn't lie to you. It tells you exactly how it is. This could flip bearish tomorrow. I don't know. But the longer that this can hold, the better we'll do towards all-time highs. If we look at the 50, the 200, and the 140, which is the 20-week in the yellow there, we are above everything. The 5200 green and red currently crossed bearish. The 200 140 also bearish. The 140.50 also bearish, and this is very reminiscent of how it looked going into Q4 last year. Last year, you will note that we did retest the 50-day moving average. So don't be surprised. I'm not going to be surprised if we pull back, retest anything at 63, tap the 50. Any of that stuff's fair game. But we are setting up for bullish expansion of everything. I find it challenging to even come up with a potential bearish counterpoint other than the obvious. It's a recession, bro. it's a recession. I just can't, I can't steel man the bear case. I don't have good arguments. I just don't. Looking at ETH, it does have an Adam and Eve. It did double tap, triple tap, quad tap the 200 week moving average. It's below the cloud. It doesn't look super exciting here, but if it can pull up through or in the daily cloud with a bullish GK cross, any of that stuff, great. If not, watch for a inverted head and shoulders or ascending triangle thing into deep Q4. It's just as it stands here, this is not in bullish territory. It's still in bearish territory. It's not even in neutral territory, still far below the 20-week moving average. So if Bitcoin moves higher, ETH will move higher with it, as will everything. It's just a matter of which moves first, which is lagging, which moves more eventually. That's something to think about. But ETH has been on the struggle bus. That's undeniable. Solana has held in this range for many months. This range admittedly looks even better than BTC. I just don't know with the unlocks, the inflation, emissions for Sol, how high this can really go. Not necessarily in the near term, but this cycle. Once again, anything towards the top of the range is what you want to see. If you're bullish, cloud is kind of a mixed bag here, but it's getting bullish again. Bearish cross on the 5200 there. So there are some things that could turn the tide still. There's a pretty clear resistance horizontal at 160. It's still working its way to negate the head and shoulders here, but it looks fine, right? It doesn't look to me like 100x long here just yet, but it's back to the middle of the range. If we measure the range target, 300 to 350 would be the level that I would expect for Q4 pretty reasonably if we can break up. So Sol looks good, much better than ETH. Then there's a bunch of alts that still, again, look better than ETH. This is what a bottom looks like. You're getting all sorts of inverted head and shoulders type stuff after a huge extended breakdown, briefly reaching the target there. Price back above the cloud, 5200 cross bearish, but probably looking to go bullish within the next couple weeks. This measures higher. All of these alt charts, they measure a little higher. TAO, depending on whether or not you pick this up. Now, I poo-pooed it on stream. I said, it's just sideways, but if you're paying attention to anything that looks like this, any variety, any variant, I love those type of trades because it is a pretty clean looking pattern. Now, post breakout, I would use William Fractals. William Fractals are giving you stop losses at 500 effectively. The measured move of the pattern is still a little bit higher, much like the S&P and the Qs that I'll talk about at the end. The risk reward isn't as great as it was at 350, regardless of how this ended up. If you're opening a fresh long up here, it just doesn't make sense to me. But I'd also use the trailing stop losses there as your guide. SUI, same thing. This one I talked about, we watched. I did nothing on it, mainly because alts haven't really done anything, hadn't done anything up until these two started breaking out. In any event, measuring this mess measures to about 170, 230. So again, like a fresh long up here doesn't, to me, make too much sense. Your trailing stop loss is like 160 based on the Williams fractals. So other stuff like RUNE, which, you know, if you know me, I'm not a big fan of protocol, but other stuff like RUNE or Say looks better. This is what a bottom looks like. You had an Adam and Eve breakdown, triangle breakdown, multi-month, triple bottom, quad bottom, quintuple bottom, whatever. All the shoulders. It had 75 shoulders. It even had a nice little fake head and shoulders here that got negated. But this is the stuff that I like. Cloud about to flip bullish there in a day or two. STX is another one. Same thing. Multi-month, triple bottom. Looks like it's ready to go higher. Cloud will like it more in a couple days. Aptos, same thing, right? All these charts, they look basically the same. So this isn't alt season yet, but it looks good enough. Looks good enough. Dominance certainly isn't breaking down, but there are some definite leaders amongst the 10,000 available for trade. Cloud here in Aptos also looks good. As far as meme coins go, they're okay. They've done well. There's no denying. I think I specifically mentioned Doge on the falling wedge. I mentioned SHIB that was down, I don't know, 85% or something from the high. That has since broken out. So none of these, aside from WIF, are above the high time frame cloud yet. So the next question is, okay, do we get, as you can see on kind of all these charts, do we get a right shoulder here in October? Do we get a series of higher lows or not into the election, into 2025, or do these just keep breaking out, right? I don't think there's a clean argument for anything just yet. but I would love to see these as a group above their high time frame clouds. We're just not there yet. Now, what might help push memes above their clouds, what will help push Bitcoin higher would be the dollar breaking down. The dollar has looked weak since the Head and Shoulders completed in July. It swiftly broke down to the bottom of the range. And now we're risking multi-month lows here on the dollar. This measures lower based on range expansion. And this is, of course, the opposite of what we expect BTC to do. And it makes sense. We are inversely correlated. The worse the dollar does, the better Bitcoin does. The worse the dollar does, the better SHIB does. That's just how it is. This doesn't exactly look like a bullish consolidation here at the bottom of the range. So if at any point in Q4, which I assume is going to happen pretty early, that we break 100 on the DXY, you can chalk that up in the bull column. Just another thing that we've always seen historically, dating back since Bitcoin's inception. In the white here, this is the dollar. When the dollar weakens, Bitcoin strengthens. When the dollar weakens, Bitcoin strengthens. When the dollar weakens, Bitcoin strengthens. If you add the halving dates, it makes even more sense. And of course, when you see the dollar strengthening, as you did in 2014 and 2022, very quickly, BTC pulls back. So this makes total sense how we're set up here for a potential to move sub 96 on the dollar. Gold, of course, sniffing out maybe a few things, maybe us taking inflation over a multi-year time frame less seriously, real yields coming down, or just a technical breakout. I don't think this is like gold sniffing out World War III. I just think it's, hey, it's time. You know, it had this multi-year cup and handle, had a multi-year inverted head and shoulders, and there's just been a series of catalysts that make sense for gold to do well. You'll find always that technicals overperform when there are catalysts, when there are very strong catalysts. Bitcoin, by the way, tends to lag gold by about 3 months. We could see a cycle high on gold of 4,000. I don't know how many people are talking about that. I see a lot of people talking about 3,000, but the measured move of this is in the 4,000 territory. So lastly here for the SPY and the Qs, much like TAO and SUI, the risk reward up here makes a lot less sense on the S&P than it did at 460 on the SPY. Trend still looks okay. Price could pull back quite a ways and trend would still be okay. Now, if we do get a dip to like 550, then this chart would just look like a garbled mess, but trend would still be maintained. I would love to see us do a bunch of nothing into the election. Just sit at all-time highs. Once the election is resolved, maybe break out, maybe pull back in an overnight session and then break out once everything's clear. I don't know. But on the bearish argument side of things, this is one thing to be careful about on the crypto side. We don't want the S&P crumbling sub 520, sub 500. That is unlikely to push Bitcoin higher. So this is trend bullish. I just don't think it's a great trade right now. And maybe that's another reason people are looking for anything else. Even the Qs, they look fine. They look okay. Maybe it's a W, maybe it's not. Getting close to the multi-year cup and handle measured move there. It looks okay. It doesn't look inspiring to be long the Qs as much as it did at 380, even at 430, but it's certainly not bearish. I'll give you that. And lastly here, maybe one of the most important charts for Q4. And again, I'm not a Tesla bull, never been a Tesla bull. I'm just looking at the chart. We're above the weekly cloud on Tesla. We are setting up for a massive inverted head and shoulders here. Now, what we'll probably see is a series of higher lows here throughout Q4, maybe into 2025. I don't think this thing just easily breaks out at 270. And another possibility here is if you draw an imaginary diagonal, we could just see a vanilla ascending triangle into 2026 or something. So this is very much an if this, then that situation. But it looks very good for an eventual breakout to 450 plus. So as we start Q4 here, Bitcoin looks great to me. Looks like it's ready to rip at some point in the next 3 months. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.